Good afternoon, everybody. Welcome to the KIF seminar on the role of regional banks in SME financing in Japan. I'm Sang-jae Lee, the moderator of today's seminar. It's a pity that we cannot see each other in person because of the pandemic, but I think it has a bright side too, in that we can save the traveling time and cost. And the topic of today's seminar, the SME financing, is a very hot subject in financial research. As you well know, compared with large firms, information on small and medium-sized enterprises are more opaque, which creates various challenges for policymakers and banks in supporting SMEs' access to finance in many countries, developed or not. That's why we invited today Professor Nobuyoshi Yamori, a respected leader in this research area. As for the time schedule, after Professor Yamori presents for about an hour, we'll have two panelists, Dr. Lim Hyung-seok and Dr. Oh Tae-rok, both from Korea Institute of Finance, who will share with us their thoughts or may have some questions to ask about the subject. Then Professor Yamori may respond to those panelists' comments or questions. Finally, if time remains, the floor will be open to the audience for discussion. Okay. Before we start, let me briefly introduce Professor Yamori. He currently serves as the director in the Research Institute for Economics and Business Administration, Kobe University. Before he joined the institute, he was a professor at Nagoya University after receiving a PhD degree from the school in 1996. He has published numerous articles in international academic journals, including Economics Letters, Journal of Banking and Finance, and Journal of Financial Intermediation. He also works for the Japanese government in various capacities. Well, without further delay, let me start the seminar. Please welcome Professor Yamori. Please.
Thank you so much, Professor Lee. Yes, please wait a moment while I prepare the PowerPoint. Hello, my name is Nobuyoshi Yamori, professor of Kobe University, Japan. First of all, I feel very honored to have a seminar at the Korea Institute of Finance today. Today, I am making this presentation from Japan. I'm very sorry that I missed the opportunity to visit Korea. My presentation is based on my paper related to the KIF. Title is The Role of Regional Banks in SME Financing in Japan, Expanding Their Roles for Regional Revitalization. Before starting my presentation, this sheet introduces me to you. I have published papers on Japanese banking in various international journals, such as the Journal of Banking and Finance. Also, I have been working for Japan's Financial Services Agency and the Small and Medium Enterprise Agency and the Finance to give them some advice on banking and SME policies. Today's my presentation is structured as shown here, based on my paper presented to the KIF. It consists of 8 sections. Let's start the first section, overview of the industrial organization of Japanese banks. There are several categories of financial institutions in Japan based on business function or historical background. Figure 1 shows the overview Japan's banking system. The Japanese banking system consists of the central bank, Bank of Japan, governmental financial institutions here, and private financial institutions. Private financial institutions can be divided into banks and cooperative financial institutions. In Japan, we usually classify banks into city banks, regional banks, regional second-tier regional banks, foreign banks, trust banks, other banks. And according to the size of the operations, their business characteristic and historical background. And also, city banks, regional banks, and second-tier regional banks are legally identical and collectively referred to as ordinary banks. Table 1 shows the number of banks in each category. There has been considerable reorganization among city banks and second-tier regional banks, but very little reorganization among regional banks. City banks have their head office in major cities and branches nationwide, and are actively involved in international financial activities. During the birth of the bubble economy, city banks were consolidated into 4 banking groups by 2005. Regional banks and second-tier regional banks are also often referred to collectively as provincial banks. I discuss these provincial banks in detail in this paper, but a brief description is first in order. A regional bank has its head office in the core city of its home prefecture and has the main business base there. Because of the strong local customer base, they suffered relatively minor damage during the bursting of the bubble economy. The number of regional banks has remained almost the same. On the other hand, second-tier regional banks, were initially mutual banks and were converted into ordinary bank under the banking law after February 1989. Now, there are no legal differences between them and the regional banks. However, because second-tier banks had a weaker operating base than regional banks, several second-tier regional banks fell into financial difficulties during the bubble bursting process. For this reason, the number of second-tier regional banks decreased significantly from 68 to 38. In many countries around the world, banks are subject to strict regulations. Japan is no exception. Under the Banking Act, Japanese banks are strictly regulated in terms of businesses that they can perform. As shown in this figure, we classify the scope of banking business into 6 categories. As I said, there are 2 types of the private financial institutions, ordinary banks and cooperative financial institutions. Are there any difference between ordinary banks and cooperatives? Cooperatives such as sinking banks and shinkumi banks play an important role in SME financing in Japan. They perform almost the same function as banks do. There are institutional differences between ordinary banks and shinkumi banks. As a joint stock company, a bank's management objective is to maximize shareholder profit. And it can accept deposits from anyone and provide loans to anyone. On the other hand, cooperatives, which initially started from mutual aid among their members, do not aim for profit. Thus, restrictions are imposed on the scope of their business and membership. Banks and cooperatives are almost identical in what they can legally do, and the differences in their operations are slight. However, in general, banks and cooperatives deal primarily with different types of customers. Reflecting customers' types, their ways of business are different. Table 5 summarizes the status of the main banks of firms according to the size of their sales, annual sales. For large companies with annual sales of over $5 billion, billion yen, the share of cooperative financial institutions is only 4%. Their share increased as the size of the company decreased. For small companies with annual sales of less than 100 million yen, the share is about 30%. The customers of cooperatives are on average smaller than those of regional banks. Because of different customer base, cooperatives use loan screening methods different from ordinary banks. As part of the project from the Research Institute of Economy, Trade and Industry, DIET, it's a part of the MITIS. I conducted a questionnaire survey of 7,000 branch managers of regional financial institutions throughout Japan. Table 7 shows the responses to a question asking what items they considered important in making lending decisions. Although many of the items are similarly evaluated, Shinkumi Bank in particular placed less emphasis on financial soundness and profitability. This is because the financial condition of small businesses, which are the main customers of Shinkumi banks, is severe. They cannot provide loans if they place too much emphasis on financial conditions. In addition, the low selection rate for Shinkin banks and Shinkumi banks on quality of the information provided by companies and their attitude toward disclosure is also low. Probably because many SME cannot be expected to provide adequate disclosure. Comparatively speaking, ordinary banks solve asymmetry information problems with hard information, whereas cooperatives deal with the problem using soft information from frequent visit and local human networks. During the financial system crisis, bank runs occurred several times, and risky financial institutions found it hard to collect deposits. Fortunately, since then, public confidence in the financial system has been maintained. The problem of not being able to collect deposits has not arisen. Instead, the problem is that deposits are collected too much. Figure 3 shows the change in deposit for 4 types of banks. City banks recorded the highest growth. Here, this blue one recorded the highest growth rate, followed by regional banks, and sinking banks. Contrarily, the deposit of second-tier regional banks did not grow. Many second-tier regional banks failed, and some surviving second-tier regional banks found it difficult to attract deposits. We look at the state of the lending market. Figure 4 shows the change in outstanding loans offered by each category of banks. Around 2000, when many financial institutions went bankrupt, the loan balance continued to decrease. Later, it once became positive for a while, but the global financial crisis caused it to become negative again. It turned to positive change in 2013 when the Bank of Japan started the quantitative and qualitative monetary easing. In particular, in 2020, Lending increased substantially in response to the COVID-19 disaster. We can positively assess that this growth of loans enable SMEs to raise funds and keep afloat. Figure 5 shows the use of public credit guarantees to demonstrate the importance of the role of regional financial institutions to SMEs. SME with limited creditworthiness rely heavily on public credit guarantees. While these figures are for fiscal year 2019, that is before the COVID-19 disaster, city banks have hardly used any guarantees. City banks are not doing business with SME that cannot borrow funds without using credit guarantees. The figure demonstrates regional financial institutions are crucial for small businesses. Furthermore, sinking banks have the largest share of 40%, followed by regional banks. Note that according to table 2 before shown, sinking's overall loan market share is only 11%. Figure 6 shows the average contracted lending interest rates published by the Bank of Japan. The lending rate interest rate has been on a downward trend since 1999, with a temporary halt before the global financial crisis in 2008, but has continued to decline since then. In 1999, the lending interest rate of domestic banks exceeded 2%. But by 2020, it had fallen below 1%. As deposit interest rates have been almost zero since 1999, the recent decline in lending interest rates has directly led to a contraction in the loan deposit margin. As the margin shrinks, financial institutions are trying to increase their lending volume to boost their lending revenues. Still, the lending competition among banks has led to a further decline in lending interest rates. As a result, even when they successfully increase their lending, their revenues do not grow. The main bank is a financial institution that a company has the closest business relationship with. The main bank relationship mitigates the information asymmetry that is a fundamental problem in SME. Table 8 is based on a survey I conducted in 2012. I asked how SMEs evaluate the main banks. The table shows the percentage of companies that gave the highest rating of very good. For example, 1, to be familiar with your company was ranked low by companies that use major banks as a main bank. Therefore, such companies place relatively less importance on communication with banks. On the contrary, when it comes to low interest rate on loan, the ratio is low for sinking bank and sinking banks, indicating that the low interest rate doesn't make SMEs choose cooperatives as their main bank. Many companies in Japan do business with financial institutions other than their main bank because of the reasons shown here. However, when a company's performance deteriorates and information asymmetry becomes large, multiple bank relationships bring serious problems. Since even the main bank do not have an accurate picture of the company, it is difficult to make new loans because the risk is too significant. We enter section 2. Here, I explain regional financial institutions are vital to local economies or communities. First, regional development and regional financial institutions. FSA's comprehensive supervisory guidelines for small and medium-sized regional financial institutions state as shown here. For example, regional financial institutions need to take an active part in the revitalization of local communities by fostering growth sector and industrial clusters. Takeoff Data Bank periodically publishes the result of its analysis of trends in the main banks of companies throughout Japan. Table 9 shows the result of its 2020 survey. Dividing the nation into 9 regions, city banks have a significant share in Kanto and Kinki region. In the other area, except for Chubu region, the percentage of city banks is less than is in the 1% range. In other words, except for greater metropolitan areas, the main banks of corporations are almost all regional financial institutions. Even in urban areas, the main banks of more than 60% of corporations are regional financial institutions. Under the local autonomy law, every prefecture must designate one financial institution as a designated financial institution or DFI. The DFI handles the collection and payment of public funds for the local government. In other words, DFI is the main bank of the local government. For prefecture, Tokyo, Osaka, Aichi, and Hyogo choose Citibank as their DFI. The other 43 prefectures choose provincial banks as their DFI. In section 3, I explain the business environment and the business conditions of provincial banks. Before discussing the details, I would like to give an overview of this section. With the aging population and the declining birth rate, the working population in rural areas is declining. The business base for regional financial institutions is deteriorating. BOJ's quantitative and qualitative monetary easing started in 2013, loan interest rates have fallen. As a result, net interest income, which accounts for the bulk of their earnings, has declined, and core operating profit has continued to decline. In order to improve the sustainability of their operations, regional financial institutions need to increase their non-interest income. Here, lending has a more significant impact on the performance of regional banks than on city banks. Figure 8 shows the movement of the loan-to-deposit ratio for each business category. The decline in the loan-to-deposit ratio of city banks increasing is remarkable. City banks are increasing their lending, but their deposits are growing faster than their lending. The loan-to-deposit ratio of sinking banks has also declined and is now almost 50%. In comparison, the loan-to-deposit ratio of regional banks and second-tier regional banks has remained virtually unchanged. The net income of provincial banks was negative during the 1990s. This was due to the enormous losses from the disposal of bad loans. Since the disposal of non-performing loans was almost completed, net income remained positive except during the Lehman shocks. After peaking in fiscal year 2015, net income has declined for 5 consecutive years through fiscal year 2019. Although not included in this chart, fiscal year 2020 is the first time in 6 years that profits have increased because of the growth in financing in the COVID disaster. In addition to net profit, net core banking income is often used to measure the profitability of financial institutions in Japan. Net core banking income is defined as net interest income plus net fees and commissions minus expenses. We use net core banking income because net profit alone does not accurately picture a financial institution's actual situation. For example, profit and losses on stocks and bonds fluctuate temporarily with market conditions and can be controlled to some extent by the timing of transaction. For this reason, the FSA's supervisory guidelines also clearly state that supervision should focus on net core banking income. The earning of financial institutions can be divided into net interest income and non-interest income. First, let's look at the net interest income. Figure 11 shows the situation for regional banks. First, since 2010, regional banks lending has been on the rise. For example, comparing to fiscal year 2010 to 2019, loans increased by 40%. On the other hand, regional banks' lending interest rate has fallen sharply. Since the deposit interest rate fell significantly, the loan deposit margin shrunk significantly, as mentioned before. As a result, the decline in lending interest rate has been greater than the growth in the amount of loan, and interest income here on loans has fallen to about 80% of fiscal year 2010 level. Many provincial banks have been working to increase their non-funding income. Provincial banks' non-interest income has increased by 14% from fiscal year 2010 to fiscal year 2019. For the major banking groups on a consolidated base, non-interest income exceeds net interest income. For provincial bank, on the other hand, the proportion of net interest income to non-interest income is 7-1, while it is 24-1 for Shinkin Bank. Therefore, regional financial institutions have not made much progress in reforming their profit structure. Non-performing loans have a significant impact on the financial result of financial institutions. Figure 13 shows the balance of non-performing loans, NPLs, and the ratio of NPLs to total credit for provincial banks and sinking banks. In the fiscal 2019, the ratio was below 2% for the provincial banks and around 40% of sinking banks. The decline in net income was smaller than the decline in net core banking income because of the decrease in non-performing loans. The reduction in credit cost has compensated for the shrinking loan deposit margin so far. The credit costs are already at a very low level and are not expected to decline further. Instead, there is a worry that the negative impact of the COVID-19 will spread, leading to an increase in non-performing loans and blooming credit costs in the future. There are two types of capital adequacy regulation in Japan, the domestic standard and the international standard. The domestic standard applied to sinking banks and provincial banks with no overseas operation. The international standard, which applied to major banks and 11 provincial banks with overseas operations. Under the domestic standard, the core capital ratio is required to be at least 4%. Currently, all banks satisfy the requirement. Banks' capital ratio have declined, not because losses have damaged the capital, but because risk-weighted assets in the denominator, such as loans, have grown more than capital. To improve the capital adequacy ratio, banks need to increase profits or reduce dividend payments. While many financial institutions are desperate to increase lending to maintain profits against declining lending interest rates, other financial institutions will do the same, making lending competition tougher. As a result, the lending amount does not increase as expected. Lending interest rates fall further and lending revenue do not grow. Short-sighted managers try to deal with this situation by raising lending targets, quotas, for bank staffs. However, they have been confronted with the problem that intrusive selling will lose customers' trust and lower the morale of bank staffs. Figure 17 shows the trend of stock prices in the banking sector and the topics. On average, the stock performance of banks has underperformed the overall market. The difference has been particularly pronounced since 2016. Thus, investors have a lower evaluation of provincial banks' future. Section 4 is relationship banking and business potentiality evaluation in provincial banks. First, relationship banking promoted by the FSA. In early 2000s, Japan suffered from the financial system crisis, when many financial institutions went bankrupt. The Japanese government employed the dual approach to solve the banking issues. Major banks were forced to hasten the disposal of their bad loans. As for the provincial banks, they were allowed to improve borrowers' financial position over time. In other words, the government asked them to solve non-performing loans through relationship banking practice. Provincial banks in Japan have made effort to strengthen relationship banking functions. In order to deal with asymmetric information problem, Japanese financial institutions routinely visit their clients to collect soft information. In the midst of the financial system crisis of the late 1990s, the use of soft information was severely restricted. The frequency of visits to customers declined, and the accumulation of soft information became impossible. The government hesitated to urge regional financial institutions to deal with their bad loans in the same manner as major banks did, because their customers were SMEs. As a solution, in 2003, the FSA published an action program and began strengthening the function of relationship banking. Recently, the FSA has seldom used the term relationship banking to facilitate SME financing. Instead, it has often used the word business potential evaluation, BPE. The FSA defined BPE as an appropriate evaluation of the nature and the growth potential of a client company's business without excessively reliance on collateral or guarantees. The FSA states regional financial institutions need to be able to accurately identify the real business problems of local companies and provide them with the advice they need to formulate and implement measures to solve them, as well as to provide appropriate financing and to provide support to secure management personnel if needed in a systematic and ongoing manner. The prerequisite for relationship banking is the ability to assess business potential. Thus, improving the ability to evaluate business potential is now a pillar of Japan's regional financial system policy. Banks reported the performance of business potential evaluation to the FSA. Figure 18 shows the implementation status of BPE based on the statistics reported by banks. It demonstrates a steady increase in BPE since 2015. The banks themselves feel they have to change, but the FSA is also encouraging them to change. In this section, I explain the FSA's measures to encourage provincial banks to change. First, abolition of the financial inspection manual. FSA's inspection manual is a handbook used by FSA inspectors to examine financial institutions. Thanks to the strict application of the inspection manual, the disposal of non-performing loans steadily progressed. On the part of financial institutions, there are some serious side effects. First, excessive reliance on collateral and guarantees, and a decline in the business potential evaluation ability have harmed the bank's lending capability. Second, it was difficult for financial institutions to reflect the risk of future loan losses appropriately. Therefore, the FSA decided to abolish the inspection manual in December 2019. I will describe three policies for management restructuring that the Japanese government is implementing. First is the special anti-monopoly law. As a 10-year time-limited measure, the special law on consolidation was enacted in 2020. Under the Act, exemptions from the anti-monopoly law are granted under the conditions described here. While the implementation of the special law, with the implementation of the special law, the largest and second largest banks in the prefecture can merge their operation. Some banks may take advantage of such opportunity in 2021 and beyond. Second, revise the law for strengthening financial functions. The law for strengthening financial function, which allows for the injection of government public funds into banks, was amended in 2020. The law may support banks to merge other banks affected by the COVID-19. The third, the Bank of Japan's special current account system. The BOJ introduced the special current account system for strengthening regional finance as a time-limited measure for 3 years. The BOJ will provide additional interest rate on current accounts held by regional financial institutions if they have a plan of contributing to a sustainable development of regional economies and either achieve a certain level of improvement in their management base or strengthen their management base through business integration. It will undoubtedly encourage banks to carry out a business integration. In this section, I discuss challenge for provincial banks. In a survey to SMEs, the FSA asked respondents about issues related to their business and management. Table 18 summarizes the result. The most concerning matter was expansion of customers and business partners, indicating strong needs for banks' business matching functions. Second is improvement of financial position. The third is human resource development and employee welfare. Purely financial issues, such as the borrowing of working capital for purchasing goods and raw material, and borrowing of capital investment funds account for less than 10% of the total. So, many companies face serious non-financial problems, and the banks should support them to solve these non-financial issues as well as financial issues. 2. Approaches to business potential evaluation. As I mentioned earlier, BPE is a pillar of Japan's financial system policy. View of branch managers of regional financial institutions. Many provincial banks intended to develop BPE abilities. I surveyed 7,000 branch managers of regional financial institutions nationwide and obtained about 2,600 responses. I asked, is your branch doing a good job of business potential evaluation? 86% of the respondents answered yes. How the ability of sales staff to evaluate business potential changed compared to 3 years ago? 60% of respondents answered that it had remained, it had improved. 32% said it had remained unchanged, and only 7% said it had worsened. Bank branch managers regarded that their branches can assess the business potential of their customers fairly well. In 2021 and beyond, it is likely that SMEs seeking to recover from the COVID-19 disaster will increasingly need equity-like funds that are not accompanied by interest payment or principal repayment for the time being in exchange for high return if they successfully recover from the disaster. The provision of equity fund is a heavy burden on banks under the Basel regulation. It is a relatively new method of funding with which bank staff has little experience. For this reason, private financial institutions have not been proactive in this area. The government has been trying to get government-affiliated financial institutions, such as Japan Financial Corporation, to actively provide capital funds so that private financial institutions can gain experience by working together with them. Expectations are growing for regional financial institutions to revitalize local communities. I discussed 5 important challenges. First, support for business startups. I conducted a questionnaire survey in September 2017 among startup companies and obtained about 1,000 responses. I asked what issues the founders are worried about. Table 21 shows the result. The most common concern of founders in pre-startup period is funding and financing. However, the provision of funds alone is not sufficient to support startups. It is also necessary to provide support directly related to the business. At present, securing employees and human resource development is a serious concern. Regional financial institutions should build a support system that can accurately respond to changing business challenges that customer companies are facing. Second, business succession support. About 2/3 of companies that go out of business are profitable, but they cannot find successors. In February 2019, I conducted a survey and about 2,500 SMEs responded. I asked what problems they had encountered during the succession. The most common response was the lack of a right-hand man within the company. Indicating that the lack of human resources was the biggest problem. Of course, a certain number of respondents were also struggling with financial problems, such as borrowing money from financial institutions to finance the business. And the financing burden of purchasing assets, shares, etc. Still, business succession will not proceed smoothly unless non-financial problems are solved simultaneously. 3. Support for business continuity planning. In recent years, Japan has been hit by many large-scale disasters, indicating earthquake and typhoons. The effectiveness of business continuity planning, BCP, is widely recognized, and the government has been actively promoting it. The Small and Medium Enterprise Toughening Act was enacted in 2019. I surveyed in October 2018 and obtained response from 2,200 companies. The ratio of companies that had already formulated BCP was only 22.3%. Just 3.9% of companies said they had received a request from their main bank to formulate or improve their BCP. Our survey also reveals that there is little discussion between financial institutions and companies on the assumption of future risks. 4. Recruitment service as a new solution. Of course, the lack of funds was a problem for SMEs, but the lack of human resources was cited more often. The recruitment business was deregulated in 2018. Now, many banks offer recruitment services. Moreover, recruitment is considered to have an affinity with the business of regional financial institutions. This is because regional financial institutions can identify what kind of persons can solve the actual business problems of the company. Regional financial institutions can follow up on the hired personnel without difficulty because they continue to do business with the company after the hiring. For the financial institution, if the company grows and needs capital investment funds as a result of hiring excellent personnel. It will have a positive impact on its lending business. 5. Establishing regional trading companies. Creating the buyers themselves would be more beneficial for local development than simple business matching. The deregulation led to a creation of the Banking Industry Advancement Corporation in 2016. Deregulation allows bank subsidiaries to help their clients' business activity by purchasing and selling regional products and branding the region. About 20 regional trading companies have already been established. This section discusses for the issues as challenge for Japan's financial system as a whole. First, digitalization of finance. Japanese financial institutions, particularly regional financial institutions, need to be proactive in adopting ICT technologies. Second, sustainable finance. With the increasing risk of climate change, the Japanese government declares that it would reduce overall greenhouse gas emission to zero by 2015. Regional financial institutions also need to get involved in ESG investment and green finance. It is necessary to think together with customers about new business development in line with green growth strategy. According to a survey of financial institutions conducted by the Ministry of the Environment, 52% of respondents said that ESG are management issues. Still, only 31% of financial institutions conducted business potential evaluations that take ESG factors into account. 60% have established a system for assessment and monitoring that takes ESG factors into account. 3. Management restructuring. Japanese government implements policies to encourage banks to restructure their operations, as mentioned before. Since mergers are extremely costly, there is a growing trend to seek comprehensive business alliance. A typical example of alliance among banks is the Tsubasa Alliance. Still, it is expected that regional financial institutions will continue to restructure their operations in order to achieve a specific scale of economy. Fourth, revival from the COVID-19 disaster. The economic crisis caused by the COVID-19 severely impacts SME that are the customers of regional financial institutions. The government has been subsidizing interest payments and credit guarantee fees, and regional financial institutions have succeeded in supporting the immediate financing of SMEs. Nonetheless, the big question now is how to restore the profitability of their businesses so that they will be able to repay the loans that have been piling up. More efforts are necessary to improve customers' core business. For such support to be effective, regional financial institutions need to be able to assess the strengths and weakness of their clients' businesses. That is, business potential evaluation ability should be upgraded. Now, we reach the final section. This paper describes the role of Japan's regional financial institution in SME financing and what efforts are being made by financial institutions and the government to address their challenges. Japanese people have a growing demand for the active role of regional financial institutions, which have essential information on the regional economy and local companies. To help companies suffering from the COVID-19, regional financial institutions must perform new functions beyond traditional ones. While lending will continue to be an essential business for banks in the future. To help regional financial institutions engage in new businesses, the Japanese government has pushed for significant deregulation. However, for banks to effectively support SMEs, banks need to know their customers deeply. Therefore, there is a strong need to improve their ability to assess customers' business potential. Finally, I would like to say a few words in closing. Today, I have the opportunity to explain Japan's experience to date. It will be my pleasure if there is anything that can be helpful to you. Yeah. Once again, I sincerely appreciate the staff of the KIA for giving me this opportunity. That is all I have to say. Thank you so much for your kind attention.
Thank you, Professor. It's a quite nice presentation. We are a little bit ahead of schedule. And so if I may summarize Professor's presentation rather roughly, first he gave us very detailed information about the current state of Japanese deposit-taking financial institutions, and then delved more deeply into the business environment and financial conditions of provincial banks, and explained how they dealt with the asymmetric information problem of SMEs and evaluated SMEs' business potential through the relationship banking. After that, Professor finally discussed challenges and opportunities going forward faced by provincial banks and the Japanese financial industry at large. Okay, now let me ask the two panelists to discuss about the presentation. Shall we start with Dr. O, please?
Yes, I'm Carol Go, research fellow in KIF, and thank you for your talk. I'm impressed by the efforts of Japanese regional banks and governments to resuscitate the local economy and the way they coordinate. Still, my question is how the system could be settled well, especially in terms of the incentive of provincial banks. Because implementing relationship banking and region-specific services by, for example, developing software information and new unconventional functions seems very costly, at least at an initiating stage. Under the situation of declining profit and weakening sustainability, such change seems even more burdensome. So, what fundamentally incentivizes provincial banks to pursue such change for regional revitalization? You mentioned encouragement by FSA, for example, but is it mainly led by provincial banks volunteering or governments forcing and rewarding? And how do you evaluate that the encouragement of government, such as deregulations, have been effective so far? Finally, which aspect needs to be more improved for the regional revitalization? Thank you.
Thank you, Dr. O. Professor Yamori, will you respond immediately or after the Dr. Lim's comment?
Now I want to.
Okay. Go ahead, please.
Thank you very much for very valuable comments for my presentation. Your question is basically the Japanese regional banks has an incentive to perform the relationship banking or business potential evaluations. Yes, because it is very costly. So historically, the Japanese bankers say, we did relationship banking. But because of the government's strict regulations, for example, during the burst of the bubble period, the government forced banks to evaluate customers with the hard information. But banks has a banks understand the companies was very good with the soft information, but the bank cannot verify to the government. Then the government say it was a bad loan. So during the burst of the bubble period, soft information couldn't be used to extend the loans. So gradually, banks lose the ability to evaluate firms during the situation. So when the FSA started the action program in the early 2000s, banks already lose the ability to perform relationship banking. So now the government encourage banks to improve the ability. And also the banks now, regional banks are considering where they should go, was how they can survive. And if they compete against the large banks, they lose if based on the scale economy, for example. So where is their strong point? And they say, they find their strong point is the close relationship with customers. So they want to, their strong point become more strong and strong. So I think I met a lot of bankers in Japan, and without no exception, all bankers say, we want to become a strong relationship banks. But also there are some crucial difficulty is the cost. Relationship bank is very costful. So now only a medium size of the customers can be enjoyed relationship banking practice. Small or micro businesses cannot be enjoyed such a relationship. So I asked many banks to encourage some ICT technologies to reduce the cost to monitor the customers. For example, now some tax accountants associations provide a special IT technology. It automatically transfer accounting result from the accountant firm to bank. So the banks don't need to visit customers to collect the financial statement. Thank you very much for your valuable questions.
Thank you, Dr. O and Professor Yamori. Now let's turn to Dr. Lim, please.
Yes, thanks for Professor Yamori for your detailed presentations. I have questions. In your presentation, page 37 and table 18. I was surprised to find that most SMEs expect assistance more from non-financial issues rather than from financial support. But as financial institutions, I'm wondering, regional financial institutions in generally can meet these expectations regarding non-financial issues? Do you expect they can meet these expectations?
Sorry, table 18.
Yes.
Table, sorry. Okay. And I find that table 18 now. So may I ask once more? Please say your question once.
Yeah. According to this table, most SMEs expect non-financial issues rather than financial support. But I'm wondering, as financial institutions, they cannot meet these expectations. What do you think?
Okay. Traditionally, of course, the Japanese financial institution is a provider of funds, not a provider of non-financial services. But recently, as I mentioned in the presentation, Japanese government deregulate services that banks can offer. So now, for example, banks can get a fee from the consultation. And bank also get a fee from the recruitment services. So now banks try to expand their abilities without financial areas. And also the government provide subsidies to banks to foster their non-financial abilities. Yeah, my answer makes sense.
Yeah, yes. Thanks for your answer. It's helpful. And other question is, can you suggest any policy implications for Korean Financial Authority regarding to the regional financial institutions loan?
I'm sorry, I don't know the Korean situation, but in Japan now we ask Japanese banks to focus on the customers, not to focus on banks itself, because when banks consider the banks themselves, banks' interests themselves, customers don't trust banks. Then if banks want to give us some good advice, companies didn't trust their advices. So make a good relation between banks and customers is a starting point. And unfortunately, some banks have not made such a good relationship with customers. Many customers trust me. For example, in my survey, firms that intended to end their business, stop their businesses, only 5% of firms tell they will stop their operations to banks. Another remaining 95% of firms don't tell the truth to banks, because once they say, I will stop the operation, the banks may think this customer's sustainability is bad. So banks should stop lending. Then the company's future is very bad. So customers don't say truth. If so, once the banks know the truth, it is too late to formulate the revival plans. This becomes a very serious problem. So we need foster the trust between the customers and the banks. It's very important task for Japanese banks and Japanese FSAs.
Thanks. And finally, my question is the retail finance. Even though the retail finance is not the topic of your paper, but would you briefly explain the experience of retail finance of regional financial institutions?
Thank you very much. Yes, this paper only deals with the small enterprise finance. And of course, regional financial institutions do big businesses with retail or consumers. Particularly housing loan market. Housing loan is a very important business for regional financial institutions. But unfortunately, this is very simple products. It means that the price computation is very severe. So volume of the housing loan become large, but net income, net profit is not so expanding. And also there in the America, consumer loan market is also large, but in Japan, people don't like borrow money on average. So the market is not so large. So that the banks cannot afford to make enough profit from that consumer financing so far. Yeah, that's all.
Yeah, thank you.
Okay, thank you, Dr. Lim and Professor Yamori. We have a little bit more time, so can I, as a moderator, I have lots of questions, but I know that the paper in written form, which will be published later, will contain a lot of more information. But when I think of the relationship banking of the provincial banks with SMEs, I wonder what's their relationship with the credit. I'm not sure the name of the credit bureau for SMEs in Japan, the credit risk database, CRD for SMEs. How their relationship with these credit bureaus in Japan for the SME finance?
Yeah, of course, CRD is Japan's credit bureau and credit information. And when they made a yes, they checked. I'm not sure. I'm sorry. Yeah, credit rating. CRD is a provider of the information about the credibility of the borrowers. But I think they use sometimes, but basically they don't, their decision to provide loans is of course based on their own information, because CRD doesn't have a concrete name information. It's only a statistic. I'm not sure. I'm not sure.
And what about the credit guarantee by government? We have in Korea, we have the coded and Kibo, which guarantees SME loans by banks. How about the situation in Japan? Is the government?
Yeah, in Japan, the credit guarantee, Japanese credit guarantee is the largest in the world. We have a lot of, and for example, during the COVID-19 crisis, most of the new loans are guaranteed by the public guarantees. Under this COVID-19 special guarantees, no interest payment and no guarantee fees are required for SMEs because the government provides all of the cost.
Let's open the floor to the audience which participate, I think, through Zoom or the YouTube channel. Is there any questions about the presentation, or do you have any more questions among the audience members? Let me check. Now there are about 23 persons listening to this presentation through YouTube channel. In June, through Zoom, I think the participants are basically the KIA people. I'm not sure. If there is any more questions about the presentation, let me conclude this seminar and thank for Professor Yamori for participating in this seminar from although it's online, and also thanks for other two discussants, Dr. O and Dr. Lee. That's it. Let me conclude the seminar right now.
Thank you very much. Thank you very much. If you have any further comments and suggestions, I'm very happy if you send me an email after the seminar. And also, we, Kobe University, have a visiting professor position to conduct joint research. If you are interested in researching with me, please get in touch with me later. Thank you so much for giving me today's opportunity. Thank you.
Thank you, Professor Yamori.